If you've looked at your auto insurance bill lately, you've noticed that it's been heading higher, much higher. Since January 2022, car insurance premiums have soared by 43%, and they're still increasing. Naturally, you want some ideas about how to cut your insurance bill. So let's take a look. If you drive a car, most states require you to carry a minimum level of auto insurance. Liability insurance covers injuries and damages you cause to other people and their property. Uninsured and underinsured motorist coverage covers injuries and damage caused by drivers with little or no insurance. And personal injury protection, or PIP, covers medical costs for you and your passengers. No-fault states typically require you to carry PIP. In January 2022, the average rate for a year of full coverage auto insurance was about $1,700, according to Bankrate.com. By January of this year, that cost had jumped to about $2,500. That's an increase of 44%. What's driving these premium increases? It turns out to be for a couple of reasons. First is that cars have gotten more expensive, parts have gotten harder to find, and damage to vehicles caused by more extreme storms has gotten worse. That means more insurance claims for damaged cars with higher bills for labor and replacement parts. Another factor is that many insurers base your rate on your credit score. Statistically, drivers with bad credit make more auto insurance claims. While we all know that correlation is not causation, auto insurers believe otherwise. And only a handful of states bar them from using your credit score in pricing your insurance. Even worse is something the insurance industry calls price optimization. Insurers use data mining and statistical models to estimate just how much of a price hike you'll tolerate before you start shopping around. And regardless of whether you've had no accidents, made no claims, gotten no tickets, and kept your credit pristine, they hike your premiums right up to the limit they think you'll tolerate without switching to another insurance company. Finally, insurers are trying to recoup the billions of dollars they've lost in the past 2 years when their costs increased faster than the premiums they charged. Put it all together, and it means insurance premiums are going nowhere but up, 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 and away from what many of us can afford. But just because you gotta have car insurance doesn't mean you can't find savings to cut your insurance bill. So here are a few things you could do. Your first move is to simply call your current insurer and ask for a price reduction. There may be discounts available, such as for accident-free drivers or for older drivers who take a safe driving course. If you're working remotely or going to the office less than you used to, driving fewer miles per year also can lower your rates. If you have a teen driver, there may be a discount for the kids' good grades. If your teen has moved out, you may not need to have them on your policy at all. Go over your current policy in detail to find any optional features you don't want or need. For example, if you have roadside assistance through AAA, a credit card, or your car's manufacturer, you don't need to pay for the same thing from your insurance company. Another thing you could do to lower your bill is look at whether you're currently paying for gap coverage. That covers the difference between what you owed on your auto loan and the depreciated value of your car. If your car's paid off, you may be able to cancel that. You may have been required to buy gap insurance by the terms of your auto loan or lease. If you've driven your car nearly into the ground, you might not get much money if the vehicle's totaled. In that case, consider dropping your collision and comprehensive coverage. Finally, raising your deductible for damages can cut your bill, but make sure you've got enough savings to cover the increased amount if you get into an accident. The next move is to hit the phone or go online and start dialing for dollars. If you haven't shopped for insurance in the last 2 years, you're quite likely to find a better deal. The Consumer Federation of America estimates that just 1 hour of comparison shopping can save you at least $125 per car. While you're shopping, remember to compare the policy details between insurers. For example, if you hit a deer while driving, some companies handle it as a collision claim and will make you pay the deductible. But others consider animal-related accidents acts of God and waive your deductible. Don't forget about your renter's or homeowner's insurance. Most insurers offer a tidy discount if you bundle the coverage of your home with your auto insurance. Unfortunately, higher auto insurance rates are likely here to stay. The Consumer Federation notes that once insurance rates rise, they usually stay high, as insurers are slow to pass on any of their own cost decreases to consumers. When drivers stayed off the roads in droves during the pandemic, accident rates dropped, and auto insurers enjoyed a big windfall. Some issued rebates to customers, but many others just pocketed the extra cash. So, once you trim your bill, write a reminder in your calendar to do it all over again in another year or two. And remember, it always pays to shop around. And if you want more videos like this from MarketWatch and the Explainomics playlist, please subscribe and we'll see you next time.